this revision session. My name is Anne. I'm here as a tutor for First Intuition, and I am today going to be looking at the tax processes for business unit with you. This is part of a series of lectures. If you haven't caught up with the two that we've done so far, you may like to do that. Task 1 in particular just orientates you to our revision materials and how the sessions work, so you may like to catch up with that one. This one is task 3, and it's all about input VAT. So without further ado, I'm going to take you to the, not that one, I'm going to take you to this one, the revision questions, task number 3. And it tells me at the top, it is all about input tax and the recovery of input tax. This task is worth 12 marks. So it gives us about 14 minutes to do it. So what do we need to know about input tax? We need to understand when and when not we can recover input tax. When can we reclaim it from HMRC? So we're going to look at input tax recovery, in particular for partially exempt businesses. We're going to understand blocked input tax, so certain things that we might spend our money on, where HMRC basically just say, nope, yep, you can spend as much money as you want on that item, but you can't have any VAT reclaimed on it. We're going to discuss fuel scale charges, and we're going to talk about bad debt relief. The reference material, as always, is very helpful, so I always suggest that you make a point of orientating yourself to this. It starts off with a nice little index, and within there as we get to this task, you can see we've got a fuel scale charge. I just want to go back up, it's hyperlinked. So we've got our fuel scale charge here, got bad debts mentioned there, we've got blocked expenses there. So a lot of the things that we're actually going to need for this task pop up in sections 11, 12 and 13. Let me just get myself to section 11, I might want that later. So do use the reference materials, super important, especially for the fuel scale charges, because we're going to have to consult the table in order to be able to work those out. So Stevenson are a registered business. They've been registered for many years, and they make a mixture of taxable and exempt supplies. So they're a business that we would call partially exempt. So the partial exemption rules will kick in for them. And partially exempt just means out of everything that they sell, some things they charge VAT on and some things are exempt. So they've got a mix of these supplies. So how does it work then where you have a partially exempt business? What you would need to do is you would need to have a look at your sales in the first instance, and you'd have to say, out of my total sales, which ones relate to sale of taxable supplies and which ones relate to exempt supplies? So what am I selling? Which goods that I sell are taxable and which goods that I sell are exempt? Or maybe it's services as well, goods and services. And when you've worked that out, you'll then say, okay, in order to be able to buy these goods or services that I've now sold on, how much of my purchases were purely to service these taxable sales? So I'm looking for the VAT on purchases relating to the taxable sales. So the VAT on purchases that links directly with the sales that are taxable. Then I'm looking for the supplies or the purchases that relate to the goods that were exempt. So purchases that link with the exempt sales. What did I purchase that I then sold in the exempt category? And then I'm looking for others, what we call non-attributable So I'm looking for the VAT on other things where I can't say specifically they fit into one category or the other. So things that might be a little bit of both. Let's say, for example, our phone bill. So the telephone bill, say we're dental practice. Dentists have some sales that are taxable and some sales that are exempt. They have a telephone and people phone to make appointments and they phone people back generally to cancel appointments, and that's how it works. But how much of the telephone bill relates to the dental work they do that is taxable and how much relates to the exempt bit? That's where it's difficult to know. So we stick it into the category called non-attributable. And then at the end, we can share it out based on the proportions of our taxable and our exempt supplies. So where do we start? Any VAT on purchases which can be fully attributable to taxable supplies will be fully recoverable. Yes, it should be, shouldn't it? Because the sale is taxable, so the VAT on that sale, the VAT on the purchases needed to make that sale should be reclaimable, because I pay the tax on those sales. So it's only fair I reclaim the VAT on those purchases. So I'm going to say yes to that one. Now the list actually wants 2 correct answers. Any VAT on purchases which are fully attributable to exempt supplies are always irrecoverable. Not always. And perhaps the reference material might help us. Just find our exempt supplies bit. Just use the index rather. Partial exemption. There we go, section 7. So the first thing it shows me in the partial exemption section is that there is a de minimis amount. But let's check this bit first. Generally, a partially exempt business cannot reclaim the input tax paid on purchases relating to exempt supplies. Generally. That word generally doesn't mean all the time, does it? It means most of the time. Read the next bit. If the amount of input tax on these exempt supplies is below a de minimis amount, there's a de minimis, the input tax can be reclaimed in full. So we're saying if the amount of VAT that we're talking about here is quite small, rather just claim it back, because it's just not worth the administration and hassle of doing anything different. If the amount of input tax on these exempt supplies though is above the de minimis amount, then we have to do a little calculation to work out how to proceed. But for now, the question says VAT on purchases which are fully attributable to exempt supplies are always, be very careful of the word always, it's a very definite word, always irrecoverable. So I'm going to say no, because if those supplies do come in at less than the de minimis, I can reclaim them back. Let's put a little note, remember the de minimis limit. Any VAT on purchases which cannot be attributed to either taxable or exempt is always irrecoverable. No, it's not. We can still reclaim some of the VAT on these unattributable supplies. We just have to claim a portion of it, subject to the de minimis. Any VAT on purchases which are fully attributable to exempt supplies are subject to a review of a de minimis limit to ascertain whether they are recoverable. Now, we're definitely talking now, because that's exactly what we do. We reclaim the VAT on everything that relates to taxable supplies. We look at the VAT that relates to exempt supplies, and generally we wouldn't reclaim it, but if it is below the de minimis, we can reclaim it anyway. And then the ones that are non-attributable, I have to split those by proportion. So let's say 50% of my sales are taxable and 50% of my sales are exempt. When I look at the non-attributable bits, I'd say, okay, 50% of the telephone bill should be taxable then, and 50% should be exempt. So I just split it in the same proportion. And then if the VAT in that exempt category ends up at less than the de minimis, I claim it all back anyway. So 2 correct answers there, 2 marks. Next, Stevenson are in the process of arranging a business event to thank their employees and loyal UK customers for their work and support. They're not sure how to account for the VAT on the cost of the event. Can they reclaim all the VAT? Again, you can use the reference material to help you. There's a little section on blocked expenses. So it says input VAT cannot be recovered on blocked expenses. Specific category of blocked expenses is business entertaining. So it says input tax can be reclaimed in respect of entertaining overseas customers, but not UK customers and not Isle of Man customers. So we can't reclaim the VAT on customers then. And we are in the process of arranging an event to thank our employees and our loyal customers. So now we're in a bit of a sticky situation, aren't we? Because the employees, actually we can reclaim, but the customers we can't. So reclaim all the VAT, I'm going to say no, because of the customers. Reclaim none of the VAT, well, it's not that either. I can reclaim a proportion. I could reclaim the proportion that relates to my employees, just not reclaim the proportion that relates to my loyal UK customers. So that one is a little bit of both. Okay, 6 marks for this part 3 and 4. So identify whether the following input tax can be recovered. Each of these businesses is VAT registered. So whether the input tax can be recovered is blocked or is partially blocked. That's the first thing. So can I recover it, or is it blocked, or is it partially blocked? And then go a step further and calculate the amount of input tax which can be recovered, with figures rounded down to the nearest penny. Lindsay is a self-employed plumber who has recently purchased a commercial vehicle, a van, for £36,000, including VAT at the standard rate. So can we recover input VAT on a van? And the answer is yes. You cannot reclaim input VAT on cars unless you can prove they have either none or very negligible private use. So I always think of maybe like funeral cars in that example. So it is a car, but it's not one that you're necessarily just going to pop to the supermarket in or take your kids to Alton Towers in at the weekend. So you cannot recover the VAT on cars unless they have negligible personal use, but you can recover the VAT on vans and any sort of commercial vehicle. So now I know that. How much VAT are we talking? Well, this is the VAT inclusive amount. So I would go back to my usual way of doing things. I'd say the net is always 100. If the VAT is 20%, it would be added on top. Gives me a gross of 120. 36,000 divided by 120, which will give me the value of 1 percentage point once it's in the VAT that can be recovered. So then I multiply by 20. And if you want to multiply by 1 over 6 in the first instance, I don't have a problem with that at all. I just do it this way for the benefit of people that perhaps don't work with this on a daily basis and need a method rather than a shortcut. Answers to 2 decimal places, £6,000 there. Next one. David Limited is a sole trader who works as a taxi driver who purchased a car for £24,000, including VAT at the standard rate. Interesting, because we just said cars, you cannot reclaim the VAT on unless they have negligible personal use. I gave you the example of a funeral car. The other example is a taxi. You are allowed to claim the VAT on a taxi. So it's a very specific area, and I think it definitely falls into the category of negligible personal use, because taxi is doing so many thousands of kilometres or miles every day, every week. The personal ones tend to be quite small relative to the business. So you can reclaim taxes. So we say yes to that. And then our amount, let's make that working 1, working 2, with the same idea, but the cost is 24,000. So 4,000 to reclaim on the taxi. That's that one. And then lastly, Taylor Limited leases a car for its CEO. The monthly leasing cost, including VAT at the standard rate, is £600. Let's have a look at our rules. So specifically relating to cars, it does tell us input VAT can only be recovered if it's wholly for business with no private use. We can claim on vans, lorries and taxis. And 50% of the input VAT can be recovered if we hire or lease a car. This is a lease car, so 50% of the VAT then. So this is a lease as opposed to the purchase of the car itself. So it's partly blocked. It's not completely blocked, it's partly blocked. So what are we going to do? VAT is at the standard rate of 600. Oh, the monthly leasing cost, including VAT, which is at the standard rate, is 600. So it's telling me I pay £600 a month. What's the VAT on that? Use the same working I've been using so far. Divide by the 120, multiplied by the VAT. So I'd say £100 is the total VAT. Then 50% of it is reclaimable because the other 50% is blocked. So I can reclaim £50 a month on this leased car. And notice how the reference material has helped us so much with each of these sections. Next one, part D. The accountant of Hobby Horse Limited has carried out a review of aged receivables at the end of the financial year and has identified several bad debts. Hobby Horse does not operate any special VAT schemes and all supplies are standard rated. So this one's about bad debts. We have a section about that in our reference material too. So for each bad debt, identify whether they are eligible for bad debt relief or not. And if they are, calculate the amount of bad debt relief that is available. And if there's none, then we write 0. So guess what? We go to the reference material. We go to section 13 on bad debts and we remind ourselves of the rules. So if we've added VAT onto our sales invoice when we initially make the sale, that VAT ends up being paid over to HMRC when we find our output VAT for the quarter. But then the customer doesn't pay us. But we've paid HMRC the VAT the customer was supposed to give to us, but the customer didn't give it to us. Not fair that we should suffer, so we can ask HMRC to return it to us, as long as we meet 3 conditions, or 4 conditions actually. First one, the debt is more than 6 months overdue and less than 4 years overdue. So it can't just be, oh yes, well, they were supposed to pay us last week and they didn't. It has to be more than 6 months, but less than 4 years old. That we've done a double entry, so we've actually written off the debt in our books. We've debited irrecoverable debts and credited trade receivables. We haven't sold the debt onto a factoring company or a debt collection agency who is now going to collect it on our behalf. We haven't done that. And we didn't charge more than the normal selling price for the items. It was just a regular sale. So that is bad debts, and when we can reclaim the VAT on a sales invoice. Doesn't apply for using cash accounting, because with cash accounting we only pay the VAT as and when the customer pays us. So there would never be any bad debts. It's one of the good features of cash accounting. So now we've revised the rules. Let's look. Twinkle has total debts of 2424, all of which are 7 months old. So greater than 6 then. And the debt has been written off. It appears to meet the criteria. So I would say we can claim bad debt relief. And the amount. Unless the question tells me otherwise, I assume it's standard rated supplies. Oh, it actually did tell me. It was just back up there. All the supplies are standard rated. So 404. And I've got Threadbare. Threadbare has total debts of 3456, all of which are 8 months old, so it meets the time criteria. A bad debt provision has been made. We cannot reclaim the VAT on a bad debt provision, where we're basically saying, oh yeah, we think some of our debts might turn bad, but we're not sure. That's not okay. We have to know specifically who it is, how old the debt is. We have to write the debt off very specifically in our books. That's not happening here, so we're not eligible for bad debt relief with that one. That's it. That brings us to the end of that task. So join me for the next instalment, where we'll move on to task number 4.